I'd like to welcome you to another Kali Tutors tutorial session. In this tutorial session, we'll be focusing on FAC1502. If you are new to our YouTube channel, please subscribe to get access to the latest public videos the moment that we upload them. If you'd like to access private content, please click on the join button on your screen. If the join button does not appear because you are using a smartphone, please feel free to download Kali Tutors application from Google Play to find the join button. Without wasting your time, let us look at the main topic for today. So the main topic for today is the disposal of assets. Okay, so far we have covered lessons where we discussed how to record when we buy inventory or when we sell inventory to others. But we haven't really dealt with how to dispose some of our assets. For example, if you have an old machinery and you want to dispose it, what's the process that's involved when you're trying to dispose that? Which account is going to be used to record the sale of the machinery, or if you are scraping it all together, which account is going to be used to deal with that? Okay, so that's basically what we are going to do in this lesson. We are going to discuss this with the help of one of the questions from assignment number 4 for the year 2025 semester 2. Okay, if you look at your assignment, since we are already doing revision, of course, you will see that one of the questions wanted you to compile a machinery realization account. So that's basically what we are going to focus on here. It's important that you understand that the machinery realization account is only created when you are trying to dispose an asset. So this account only contains information related to the asset that is being disposed. If you are buying a new machine, you do not record that in your machinery realization account. Okay, so let us focus on that. It's very important. Okay, so let's read the question. They say the following information relates to Tumelo traders, and they gave us the financial year end date for Tumelo traders. In this case, it's the 31st of July. It's important to take note of this year here, as it tells us which year we are referring to. Okay, then they say for plant and machinery at cost, this was the balance. Okay, accumulated depreciation for plant and machinery, this was the balance. Then they provided us with additional information. According to the assets register, plant and machinery consist of two facet machines of equal value. So here, the plant and machinery consist of only two assets, which are the facet machines, and they both have the same value. Both machines were purchased by obtaining a loan from Investel Bank, and they were charged 15% interest per annum and installed on the same date. Okay, then they proceed to give us more information. Depreciation is written off at 10% per annum by the diminishing balance method. In this module, we are going to use three methods to calculate depreciation. And for this question, they were specific that we should use the diminishing balance method, not the straight line method or the method that is based on production. Okay, on 31 December 2023, management decided to increase production capacity and purchase a mismatch machine on credit from Tembi Ltd for 92,000. One of the facet machines was traded in, reducing the amount owing to Tembi Ltd to 55,500. On January 1, 2024, installation charges on the new machine amounting to 12,000 were paid in cash. Okay, so in terms of this question, or in terms of the given information, we can tell already that here they are disposing one machine, and the total cost for both machines was this amount here, and the accumulated depreciation by this time here, it was 114,500. Okay, so if we want to know the accumulated depreciation for one of the machines, we are just going to divide by 2 because we have 2 machines. Okay, even the price, if we want to know the price of one, we are going to divide this value by 2. Okay, we are told that the machine is written off at 10% per annum, and we are using the diminishing balance method. If we have the book value of the machine and we also have the accumulated depreciation, it is very easy to get the carrying amount, which we are going to use to actually calculate the depreciation for the year or for the period from 1 August to the date on which this item is being disposed. Okay, so that's what we need to focus on. The question is, post the above transaction to the general ledger account provided below, and they give us the machinery realization account. Okay, I think it is very important that at this point we really try to picture what is happening. Okay, so let's say at this point the entity has an account known as plant uh, and uh, and machinery. So in this plant and machinery account, it has recorded that it has machinery worth the money that they stated. I think it's 189 something. Okay, 189 something, and this money okay was financed through a loan and stuff. Okay, but at this point, it has a total of okay 189 thousand something. Okay, so these are the assets of the entity. And when we discussed assets accounts, we stated that if an asset account records a transaction where the assets are decreasing, that asset account must be credited. So any transaction that leads to the decrease or the reduction of assets must be recorded on the credit side here. So in terms of machine realization, we are trying to dispose one of the assets. So one of the assets that made up this amount here is being disposed. So what that means is that we are going to record the value of that asset that is being disposed here. Okay, and for this transaction, let's say this is 90 something thousand, and for this transaction we know that the other account that is involved is going to be machine realization. So since we are crediting this plant and machinery account, that simply tells us that we are going to debit the machinery realization account. Okay, so once we know the half of this total here, we are going to write it here, and here we are going to say this is machinery realization. Okay, what does that tell us in terms of what we are doing here? It simply means that here you are supposed to choose plant and machinery. Okay, I think that makes sense. So now that we know that we are going to debit the plant and machinery account, what we are supposed to get is the value, or that must be debited here. Okay, so let us do just that. Let's calculate that by first deleting this. Okay, so that means we need to go back to this total here. Then to get the amount that must be debited, we are just going to say 189,900 divide by 2, because they told us that we have 2 machines here, so we want the price of 1. So take out your calculators and calculate this. Okay, and if all is well, you are going to get a value of 94950. Okay, so this is the amount that must be debited. So I'm just going to delete this and then go back to my account. Okay, and then you write the amount here. It's 94950. Okay, I'm sure now you understand where this information comes from. Okay. In terms of machinery realization, you must also record the accumulated depreciation for the equipment that you are selling, and you do this on the credit side. Okay, so this is what we're going to do. We're going to record the accumulated depreciation. Okay, to get the accumulated depreciation, we must use the information given in this question. The first step is to first get the accumulated depreciation at the beginning of the financial year. Okay, so the accumulated depreciation in this case is going to be, remember, we are interested in the accumulated depreciation for one of the machines. So we are going to say 114,500 divided by 2, and then this is going to give us the accumulated depreciation. 114,500 divided by 2 will give you 57250. Okay, so now that we have the accumulated depreciation, what is important now is to calculate the carrying amount. Remember, when it comes to the reducing balance or the diminishing balance method, we calculate depreciation on the carrying amount. So in this case, the carrying amount, I'm just gonna denote it as CA, will be the cost of the machine that we just calculated previously, which was 94950. Then you minus the accumulated depreciation. In this case, it's going to be 57250, and then this is going to give us the carrying amount. Okay, so let us use our calculators to get the carrying amount. It's 94950 minus 57250, and what I get is 37700. So this is the carrying amount. Okay, now that you have the carrying amount, this is what you're going to use to calculate the depreciation, which is at 10% per annum. But before we do that, there's something that you need to be careful about. This 10%, it's a yearly reduction in the value of the asset, not just for few months. So it reduces in value at 10% for the whole year. If the machine is not used the entire year, what you're supposed to do is to calculate the number of months for which this machine was used, then divide by 12 to get the fraction of the year for which this machine was used. Okay, so let us look at the information given here. The starting of the new financial year has to be 1 August, okay, 2023, okay, and this machine was traded in at 31 December in the same year. So you need to calculate August, September, October, November, and December, since it was used the whole of December. And this is going to be, okay, equals to 5 months. Okay, 5 months. So this is going to give us the fraction that we are going to use to get the actual depreciation for the period for which the item was used. Okay, so now that we have the carrying amount, what we are going to do is to say 37 to get our depreciation. Okay, this is the depreciation for the year. 37700 multiplied by 10%. 10% is just 10 over 100. Okay, we are converting this to decimal, and then we multiply this by the fraction because it was only used for a portion of the year. In this case, this is going to give us a value of 37700 multiplied by 0.1 multiplied by 5 over 12. Okay, so what I get here, it's 1570.83. But you need to be careful here. As part of the instruction, they told us that we need to round off to the nearest